All right, ladies and gentlemen, we back after AFS, end of financial year. We back on the pod. Welcome to the pod where we chat about our experiences in the accounting and finance world, experiences as dads, experience as finance pros, experience as sports tragics. Experiential podcast. Ash, welcome back, man. It's been a couple of months since we've done this.
Yeah, absolutely. It's been a while. We forgot how to set up the equipment first of all. We're like, where did this cable go to?
It was daylight when we started. We're missing a member though. We're missing little Hubert over here.
Yep. He's finally he's had a baby.
Yeah,
a baby girl. So yeah,
that's
congratulations,
exciting.
Hubert.
I'm not sure if he's been keeping it to his chest, keeping those cards close to his chest for a long time.
Yeah.
Surprised us out of nowhere. So congratulations, Hubert. We'll miss you on this pod. But it's good because we've been able to lower our input volumes on the microphone. What's new with you, Ash? What's been happening in the last couple of months since we've last chatted on this pod?
Yeah, a lot of work. So just been keeping busy with that. We've changed daycares for Braden. And now it's just been a Power BI journey, really, to be fair.
Yeah.
So, yeah. And from the home front, looking forward to this warmer weather again. So,
yeah, it's turned out like a early summer, isn't it?
Yeah, absolutely. I burned through about a ton of firewood.
Yeah.
I think within about a month and a half. So, that was properly solid. How about yourself?
We have been, same thing, lots of work. Sold a business as part of work. So that's been a good experience. First kids navigating, starting school. So that's also been an interesting experience, going through that and then juggling the day as well. So lots of hats off to all the parents that do the school pickups and school drop-offs, because I now get to experience that, which has been good learning. But yeah, it's been about it, mate. We've been talking about the evolution of this pod. It's gone through a couple of different journeys, and I think you said 6 to 8 months ago about how this, we should make it a bit more niche around our strengths, around, what we're good at. And I think we said, nah, don't worry about it. And then finally we've come around. So, I guess take us through that journey. What did you see 6 to 8 months ago around where we could add value and why this would be useful for everyone?
Yeah, absolutely. So, I haven't written anything down for this, but look, I think our core strength of this group remained in what our backgrounds were. So traditionally, like the three of us, we've all got chartered accountant backgrounds, but we've also worked in sort of the finance field and then commercial areas as well. And I think just the way we look at numbers and interpret and like how we structure those conversations about how do we add value to companies. And I was like, that's what a lot of people don't have access to. And it'd be really good if we can actually apply that and inform people and educate people on what we're doing that's, could add a lot of value. So I was like, let's take that lens completely out. So I probably approached it wrong with how I structured the initial conversations, but we finally got there.
I think it made sense. I mean, it made sense before as well. It's now that we're thinking about it, how do we actually go and help businesses out, that this kind of has linked. We've been able to link and connect the dots between the two. I think the cool thing as well is, like you mentioned, our experiences across different industries. But when we were chatting at an event a couple of weeks ago, we're talking about our unfair advantage. And yes, there's a lot of things that we can add value, but our unfair advantages, since we're 18, we've been working in accounting and finance across different industries, in different types of teams, commercial, reporting, finance, various other corporate functions like HR. So that's where I think our bread and butter is, and that's where practically we've been able to help business owners. But, from a podcast sense, it's going to be exciting to add that value to through the screen.
Absolutely.
So I have been talking to friends that are starting new businesses. Spoke to a couple of people last week in the construction space who are ex-engineers or project managers that are starting their own construction businesses. Been talking to people about 6 to 8 months ago who have started new recruitment businesses. And one of the first things they ask is, they talk about strategy, they talk about customers, which is the right conversation, but no one ever talks about what do I need from a finance and accounting perspective? Because they all think, I'm just going to start my business, run it through for the whole year, and when it's tax time, I then worry about my numbers. So I
Where's
thought,
my box of receipts, right?
well, that's right. And, it's fair enough as well, because sometimes people, that's what they're good at. They don't want to think about financially how they can structure their business. But I thought episode 1 on this side of the financial year, it'd be good to talk about, I guess, the accounting and finance 101 principles that we want, and we tell new business owners, particularly if they're our mates, on how they should set up. And when I'm talking about accounting and finance principles, I'm not saying AASB 116. We're talking about practical things like, things that you want to implement practically from your general ledger type of structures, or, things that you need to think about to help you avoid pain from a process perspective downstream. So Ash, you've had a bit of experience across different industries. Maybe just to build some context, if I go around the circle, you've done waste, construction, professional services. Any other industries I've missed in there?
No, professional services break down from like the recruitment, but also like the tax companies as well. So
yeah, and similar background with me as well. So I think what would be good, Ash, is to outline from those industries, and sometimes it's industry agnostic.
Yeah. But
what the kind of 101 things are for a new business owner to think about before they set up their, I guess, accounting and finance principles in their business. So more often than not, they'll usually have one accountant. Sometimes they don't have any accountants, and they might outsource or use a firm down the road. Or if you don't, you can use us. But a couple of things, if I started us off, Ash, spreadsheets, start off with spreadsheets, or a cheap kind of general ledger tool like, MyOb at $9 a month or something. What do you suggest?
Ooh, I'd say go down the GL path, but I'm open to using spreadsheets at this stage, right? So the reason being, like, it depends on your life cycle, your costings, everything else that comes with it, right? So if you're just a simple business that does a simple model, let's say I'm building cabinets, for houses, you can largely keep everything on track, like using a spreadsheet. But let's say you get more than 10 customers, and now you got different payment terms and everything else, the spreadsheets are going to fail pretty quickly. And that's where an accounting system really, for the $9 a month, like actually pays off very quickly. So unless you're a gun at spreadsheets, which most business owners aren't, I'd highly recommend getting a decent GL system.
Yeah.
How about yourself?
And that's, the advantages as well, downstream reporting from a compliance perspective. So there's obviously things like tax, there's other types of payment stuff, reporting that are usually built into a lot of the general ledgers. Like you said, small things. So like the Airbnb we run, all of that is done on a spreadsheet because it's fairly basic. We run all our finances from it because easy to categorize, no need to do. Chuck that in a general ledger system. But like you said, the more complicated things get, especially if you're expecting your business to grow, which most business owners hope, you might as well start on the foundations on day one. Any preference to types of general ledgers?
No, actually zero preference.
Zero as in XER.
Well played there. No, I'd usually look at all the big players and just sort of see like what meets your criteria. Like, so once again, depending on your industry, right? So if you're very heavy in sort of like your materials or, like stock or anything else that looks like that, or like you're going to do heavy quotes, I'd be getting a system that can actually cater for that stuff. So not all systems are built similar. They've got very similar foundations, but that'd be slightly different for like what you actually need. So I'd be looking at one that actually is appropriate for your organization, right? So in this particular case, you'd go for one. If I'm going to go for now, I'm a dental company. I've got a lot of equipment. I'd find somewhere that can actually handle that style of GL for me.
Yeah.
How about yourself? Any preference?
No, that's a good point. I think no preference. Integrations are probably key if there's other systems, and sometimes there's out-of-the-box connectors for some. I know MyOb, as an example, which we're using now, doesn't have out-of-the-box data connectors, so you have to get a third-party one. Slightly annoying, but anything is possible. Depends on your appetite. So that's all good thoughts there. The second is accounting and reporting structures. So now I'm thinking, as a business owner, I've got a GL, I've subscribed to a $9 per month subscription, and now I'm thinking, all right, what next? How do you go about thinking through reporting structures and GL codes and all this other stuff? Some of this comes out of the box, but is there a particular, like, you're head of reporting at where you are?
Yep.
How you thought through reporting, and is there any junk that you wish would have been done better from a finance perspective?
Ooh, it's a very sensitive topic right now. No, I think you got to balance out. Effectively, if we're talking GL codes, like I'm gonna refer to them as cost centers right now, but you can have too little or too many. And this depends once again on how much sort of visibility you want on each area, right? So the more granular levels I have, like let's say I split this table, okay, this one table, but then I want to have individual chairs as individual cost centers. That's all well and good, but that means you need to go into 8 different, P&Ls and try to get your numbers out. So if you're a simple business that doesn't require that layer of complexity, really try to keep it to what numbers are you trying to get out of the system. Try to structure it that initially. So, like if I go back to the sort of company, if it's a recruitment company, you don't need to have a lot. You may break it down by state, you may break it down by business practice. You don't need a lot more than that. But when you do break it down, it's probably due to like where your business is in the life cycle.
Yeah.
And you may come back and say, hey, look, this is a new focus point. I want to actually split out a whole area so I can measure it.
Yeah. And I think as well, with that breakdown, a lot of businesses I've seen, as an example, break down general ledger accounts by product or by practice or by country, which a lot of your new general ledger systems have this dimension capability. So as an example, if you have a revenue account, I'm working with a business at the moment, which is like revenue division 1, 4101, revenue division 2, 4102, revenue division 3, 4103. Whereas you could just have the one revenue account, but through this dimension capability, you can have a different division code against a revenue account, which makes that 3-dimensional reporting much more effective.
Yeah, way better, right? Way
Whereas, I think the old school thinking with the old school systems, which a lot of businesses are still on, is just create a general ledger account for everything.
Yeah.
When it comes time to reconciling, when it comes time to reporting and stuff, it just becomes a nightmare because now you've got 1,000 general ledger accounts.
Yeah, 100%. And your reporting becomes really unclear, right? Because now you're trying to, if you're trying to combine those 3 that you've just said as well, there's 3 separate ones, and like you got to figure out all these like really nonsense rules.
Yeah.
The reality is it's pretty simple. Like it could just come out quite nicely in a report as well. So yeah, I agree.
I think a good practice as well is think of your data like a pivot table. Like if you can put it in a table and structure it, and then report on it through a pivot table, then you've probably structured it right.
Yeah. Whereas
if you can't do that, then go back to the drawing board and try and think through it again.
If you haven't seen what a pivot table looks like, hit up our boy Kevin here. So.
Third one, there's a lot of simple wins. So these are things like auto bank feeds. So this is a simple one because I've still got businesses in kind of my remit that do manual bank transactions because that's what we've always done, and it's just too hard to get the paperwork and stuff across to the bank. Massive pain in the ass, but if you could do auto bank feeds, that's about 75% of your day saved, especially when you've got hundreds of transactions, thousands of transactions going through per day. Worth the cost sometimes to avoid that manual input and drama with inaccuracies and stuff.
Yep.
Payroll, sales, and other system integrations, Ash. So from your reporting hat lens, how important is that? And I think from a reporting view, what's your financial source of truth in the businesses that you work with?
Most businesses, it's the GL for sure, right? So most businesses are GL. The current business, it's a combination sort of approach. So they're using a combination of sort of timesheets, adjustments, and then the GL as well. So just depending on which version of the numbers you're looking at, that's how we'd be getting it out. So but if you take the payroll and sales integrations, I think that is important, right? Because at the end of the day, you want to have visibility of what one system's doing to impact the other arm. So like the left arm's talking to the right arm, right? So if we're saying, oh, hey, we made $100,000 worth of revenue, but the GL can't see it, we have not made $100,000 worth of revenue, right? Yeah. So we just need to make sure we're clear on what we're actually reporting on and how we're getting those numbers, because that's going to matter on how the business owner now, you're going to have to drive your growth next year as well, because you're going to be looking at numbers. You're not going to know which set of numbers to look at.
Yeah, that's a great point. So integrations, one source of truth, really important. There's controls and processes that I won't bore you guys with, but obviously pretty important, if not at the start, at some stage to think through. And this is mainly around how does your data come in? Is there anything being done with it before it's being reported out? And everything, checks and balances with that. There's also an accrual and cash accounting piece. Ash, what's the best way to explain accrual accounting?
Timing. So have you got a better definition? I want to ramble for a bit. All right. So cash accounting is effectively when a transaction has occurred, like when you physically paid for that service or you've received the money for it. Accrual accounting is effectively when you've transacted something but not been actually physically paid for it. So let's say me and Kevin have an agreement today. We exchange some services. I've got a fee payable during this time, but Kevin may pay me in 3 months from now. But I'm going to be recognizing the revenue for me today. And we also that just creates when did that sort of transaction, when should it have occurred? And there'll be then a sort of a cash flow gap behind that.
Yeah.
Did I explain that correctly?
No, that was good. And I think a practical example, so with the construction guys, it's really hard sometimes to explain this to PMs when they're managing their budget. But for me, it's all about if you perform the work, we should be recognizing the revenue. And that's kind of how I try and drill it into them. As well as that, if you perform the work and we haven't recognized the cost, then we should be accruing the cost for that. So that's accruals are kind of a word that get thrown out, but it just means that we're recognizing something when it's been done, either a cost side or a revenue side. And if it hasn't, then you're deferring that and pushing that when it should be recognized. So
let's drill that into that construction example very quickly. So that PM example, like what Kev's trying to say is let's say you're a PM right now.
Yeah.
You know that you've contracted or subcontracted like a roofer to come in and do a particular job.
Yeah.
So you know that invoice is coming at one particular time, and you know the work's already been done.
Yeah.
And the invoicer, the roofer then doesn't invoice you for the next 3 months, right? Kev, you can actually accrue that number because you go, I'm expecting this bill to come through. Therefore, your numbers that you're getting, you can actually start, having the correct timing of, yes, while it's late, I'm still actually going to, have that invoice, that the roofer's invoice come through. I can have that expense sitting there. Everything sort of works out.
Yeah.
So when the final invoice does come through from the roofer, we can reconcile those two numbers and adjust everything. That's fine. But if we're just doing cash accounting, imagine you trying to plan your cash flow.
That's right.
And all of a sudden you see this bill come through going, oh, we did work 3 months ago. That's going to cause all sorts of chaos, right? Because you've got no track of what you're expecting now.
Yeah, 100%. And it's funny you mentioned cash flow because that's the other side of it. If if your accrued income is too high or, you're just managing everything through your accruals, then your cash flow is really going to suffer because you're trying to pay your suppliers. Depending on your payment terms, you're receiving your cash late. So we'll probably set up you can probably spend an hour just on talking about cash flow management itself.
It's a brilliant topic.
Ash, you had some really great points here, and I'll probably give you a layup or an alley-oop here for you to kind of talk about it. But the whole concept of what's the term here? What's measured is managed. And I think you were talking about kind of business principles, KPIs, what's important for the business and setting that up. So talk us a bit through about that. If you're a business owner starting right now and you're thinking about your finance and accounting, you don't want to, blow your head up thinking about it.
Yeah.
But what are the first principles thinking to start you on the journey of setting up your financial structures right? And I'm not talking GL structures. I'm talking about conceptually thinking through how do I plan for growth over this next year? How do I plan my business out? And then how do I set us up for success? So,
yeah, sure.
Yeah.
Wow, that's a big big topic. All right, so I think if you're a small business, you've just got to figure out what your key drivers are, right? So in this case, if we're just running a services company, we know that it's going to be clients coming in that's going to be providing us with that monthly ongoing revenue. I'd be focusing on that and then figuring out what the cost to deliver that is, and then can I scale that with the existing headcount, or what's that sort of point that I'm going to need to sort of expand that headcount to keep growth. I would also just look at things like how do I need to pay my people versus how do I need to pay my suppliers, and how do I get the cash in. I'd be really structuring around what the business do as their bread and butter. I wouldn't be first of all thinking like when you talk to someone, their first conversation is, oh, but you know, how are you going to structure your tax?
Yeah.
That's not the first point of this is how do we make money sustainably?
Yeah.
Right. So, I think that's how I'd be initially looking at it, going just really back down to what levers have you got to play with when you're out in business world.
Yeah.
What are your thoughts?
I think that's a really good point. And I think there's a lot of pieces in there around, like we were talking about before, managing your cash flow as well, because what you don't want to do is go down the journey of planning out your business cycle, particularly for the first couple of months, poorly, where the cash flow starts to bite you and puts more stress on you than chasing that next dollar. Ultimately, though, you're the best. What the challenge is going to be is you're the best salesperson for your business. You're probably the best operator for your business. And now you need to be the best financial person for your business as well. So if you can kind of offload some of these tasks, like even your finances, there's cheap bookkeepers, there's, accountants. Hit up your accounting friends to help you think through that as well, because sometimes running a business is a very lonely journey, and the more you can lean on people in your circle, the better. Larger companies, Ash, you've got something here on larger companies needing a reset and, seeing how their business cycle and they thrive.
Yeah, absolutely. So like we've been chatting about new businesses, but also like, existing companies also go through these reset phases of, hey, look, the existing infrastructure one isn't working, or we just need to do something better or be more up to scratch. So like that's also applicable. And then that whole implementation it's like a new business now, right? Because they've got to go back to the basics of what do we want to show, how do we want to report on it, how do we want to measure it. So I think that is really important, like understanding your life cycle in the area of the business and sort of like trying to work out what you need from a system and then how do you like sort of implement. There's no point of actually going and getting a Ferrari day one when you're in one-man band that's a plumber. You know what I mean? Like you need to get sort of an appropriate system. And as you grow and scale, you may go ahead and change your GL systems and whatever that is several times over the course, but something that can scale with your needs as you need. So,
yeah. That's a great point. If people want to get in touch, Ash, you're on LinkedIn.
Indeed.
Ash is pretty good at helping you think through data reporting structures, but also I guess the advantage we both had is we've also had audit experience sitting at the other side of the table, looking through the books of companies and seeing where sometimes some of these fall short. Any final comments, Ash, before we jump onto a serious professional move?
No, this is good. This is good.
Okay, cool. Apple CFO has stepped down. Well, all the articles say step down. He's actually stepping into another leadership role, looking after IT and corporate services, which I feel like is pretty cool for a CFO to make that their main remit. So Luca Maestri has moved into a new role, but what stood out is some comments he made a year ago about his finance team that has been going wild on X and Instagram, LinkedIn, which I thought I'll read, Ash, and maybe get your thoughts on some of this, because it's wild to think Apple, one of the largest companies, or probably, one of the largest businesses in the world, runs with a finance team like this. So he said,
we always believe that quality is more important than quantity. And so, for example, we run the company very lean. I tell my guys in finance, I don't want you guys to ever benchmark anybody else because you can only get bad ideas. We run the finances of Apple with about half the size of some of the companies that I worked for before. They were like a tenth the size of Apple, right? I have an investor relations group of two people. I have the group that manages $230 billion of cash is a group of 7. I know when I look at my counterparts in other large companies, they've got multiples of those resources, but we really believe that if we have the right people, we don't need...
Now, Apple's finance stack, Ash, good old Microsoft Excel. You'd expect Apple to use Apple products, but can't go past Microsoft Excel on Windows. So don't use even Microsoft on the Mac version. It's Microsoft on Windows. Oracle, Tableau for reporting, and SAP. So what are your thoughts on reading that and I guess Apple running so lean?
I like it. I like it is my answer. I think it takes a long time to get there. Like this is not a happened overnight type of situation with this whole the finance, and this would have been a long play of what do I really want? What's the core team look like? Where are my concerns? What are my issues? And how do I actually fix that? So yeah, like right now, if we to run a business that scaled really quickly and went, hey, you the 7 people, that's definitely not going to happen. But he's obviously had a lot of learnings throughout. So I think there's a big part of the sort of iceberg that's hidden. But I think it's really good. Like it does highlight, like you don't need a heap of accountants and finance people, right? What you need is good quality people that understand what they're doing and understand their position within the company. So like it's almost like a team sport. Like if we go back to it, right? Like everyone's got a role to play. If everyone's aligned, it will work.
Yeah.
But if you got your fullback thinking he's a front rower, it's not going to work, right? And I think that's a real gap here. So it's about getting like your systems and processes all down pat, your finance GL systems that are all scalable within your business, but getting the reporting out of it. And wherever there are issues, you're closing it then and there. You don't come back and say, hey, we'll fix that another day. Yeah. You fix it then and there. Yeah. Because if you leave it, it's going to come back and bite you out real quick. Yeah. What's your take on that?
Yeah, I think it's funny. I've been reading some stuff on VCs and private equity when they acquire firms. And a lot of firms, the first thing they do is they'll get the 3 or 4 most important leaders and almost like a draft pick, tell them, so if we have a firm of 70, they'll say you only get to keep 30 people. Pick your 30 people that you can't live without. And more often than not, they pick the 30, the business still survives, and more often than not doubles or triples their revenue. But it just shows that there's a lot of fat, not just in finance, across the business in general. And, you leverage whatever tech that you're using. You have high quality people in the right positions. Yeah. It's a no-brainer. And I think you and me have worked in teams where sometimes, you have more people that are just churning the wheel rather than focusing on the right things. And sometimes we've been that people too. Like, we're not saying we're sitting here that we're high quality people. I've been in teams where I've done the bare minimum because, we've had probably poor understanding of where our role eventuates into. But also because we can't see the bigger picture or we haven't had that leadership and direction. Yeah. Everyone's just doing whatever they want. So definitely great points. Aspirations for Apple CFO, Ash?
I think it's the right path. Like basically, like where I currently work, the CFO has actually taken on a role of sort of the CIO, and he's got sort of like semi-indirectly the shared services stuff coming into him as well. So
why do you think that is? Because it's the same in my workplace as well. The CFO kind of manages tech. Yeah. As well. Why is that? Just because of capital and IT expenditure?
Well, I think it's both because like they come in from a systems point of view already, but they can also like be the enablers. Usually, like you see finance people as being, like they go, no, we're not spending money on this, but they're getting more across like why it's critical. And now you're sort of being chucked into the justification of, hey, if we get this tech stack, we could actually save X amount of headcount or savings here, or it's going to improve our revenue. Because they're seeing more of that stuff in real life, not just in a PowerPoint presentation of 1,000% increase in GP or whatever that looks like, right? I think that's going to be critical. And they're also, with CFOs particularly, they've got a broader understanding of how generally most of their systems work within the finance realm. And now they're able to start sort of zooming out and going, okay, what does this system do? Have we already got a version of it that already exists in the ether somewhere that we're paying for a subscription or we're not using? Do we have time to cut that out as well? So I think it actually works double. Yeah. Your thoughts?
Yeah. And I think a lot of times all your IT systems kind of flow into your numbers. And so there's such a critical pathway of making sure your CFO and your CTO or CIO are aligned with strategy. Yeah. And, sometimes it's hard to pay for 2 execs in that. So it's just easy to revert to the one to manage it all. But yeah, like you're saying, I think there's a correlation. I wonder if that'll evolve over time, where your CFO in every company will also manage your tech spend, but your CTO will be more, focused around, I don't know if it's like automation or AI or some other part of that tech stack that they drive more than actual systems and infrastructure. So
it's definitely, I think the change is happening. It's well and truly.
You're seeing it already?
Yeah, I'm definitely seeing it now, because everyone, we've moved away from how important traditional accountants are and the value sort of that brings. We're now going into what else can we do? How else can we add value? And like tech's the next thing, right?
Yeah.
So
Yeah. It's good chat, Ash. YouTube chivalry or Spotify chivalry, one of the things that helps the algorithm, helps us do what we do, is liking and subscribing and commenting if there's stuff that you liked in this, or if there's stuff that you hated, or if there's stuff that you want to see more of. But it's chivalrous, just like when you go through the door at the pub, someone's behind you, you always hold the door open. Same way, you watch this video, it's always nice to like and subscribe. So YouTube chivalry, return the favor. Thank you for watching and listening. Ash, had a great time.
Brilliant, mate. Always a pleasure.
We miss Hubert, but we'll survive without him. Thanks, guys.
See ya.